Okay, let's just dive right into this explainer and uncover a massive, hidden financial drain you might be facing in Pakistan right now. The reality is, the rules of the game have dramatically changed for the 2026 tax year. If you're sitting on the sidelines without being officially registered, the system is quietly and totally legally draining your bank account on almost every financial move you make. Today, we're going to look strictly at the data to show you exactly how much this is costing you, and more importantly, how incredibly easy it is to stop the bleeding. To keep things simple, we've broken this down into four quick parts. First, the hidden costs hitting you in 2026. Then we'll compare filer versus non-filer rates, dive into property and those sneaky hidden risks, and finally, exactly how to become an active filer.
All right, kicking things off with Section 1, the hidden cost of 2026.
So, why exactly is your bank taking your hard-earned cash? Well, if you've pulled out money recently and noticed a weird, unexpected deduction, you're experiencing the immediate pain of the government's push to document the economy. You look at your receipt, you see a fee that definitely isn't a standard ATM charge, and you think, what just happened? Actually, it's not a bank error. It's Section 231AB of the Income Tax Ordinance. It's a targeted withholding tax designed specifically to penalize individuals operating outside the documented tax system. Under the 2025-2026 Finance Act, non-filers are now losing 0.8% on daily cash withdrawals over 75,000 rupees. Active filers, they're completely exempt. To put that into perspective, if you withdraw 100,000 rupees in a single day, the bank automatically deducts a tax on the 25,000 rupees that exceed the limit. If you run a cash-heavy business or, you're paying for a major expense like a wedding or construction in cash, this 0.8% penalty compounds incredibly fast. But if you're on the active taxpayer list, that rate instantly drops to absolute zero. Moving right along to Section 2, filer versus non-filer rates. The financial chasm between filers and non-filers basically means you are paying double the tax on everyday investments and payments. Just look at the numbers. If you earn dividend income from stocks, filers pay 15%, but non-filers get slammed with 30%. Earning profit on bank deposits, a filer pays around 15%, while a non-filer loses a staggering 35% of their profit to taxes. Honestly, even if you're just paying for your monthly Netflix subscription or buying something online with a foreign card, you're paying double the tax of a filer. You are effectively choosing to be penalized every single time you transact. And this is where it gets absolutely crazy. When buying property, a non-filer is penalized with a crippling tax rate of up to 18.5% compared to a maximum of 2.5% for an active filer. This falls under Section 236K, which mandates an advance income tax collected from the purchaser at the time of the property transfer. So if you're buying a high-value property, over 100 million rupees, an active filer pays 2.5%, a non-filer pays 18.5%. Guys, that is not a small margin. That is a massive wealth-destroying penalty just for failing to submit a basic online form. On just a single real estate deal, you could be losing hundreds of thousands of rupees simply because you lack a registration. Whether you're a buyer paying Section 236K or a seller paying Section 236C, the story is exactly the same. The government is essentially using the property market as a giant net to catch undocumented wealth. Every year you hold out on becoming a filer, you are basically volunteering to hand over a massive percentage of your property's value straight to the tax authorities.
Okay, let's jump into Section 3, property and hidden risks.
Missing the filing deadline now drops you into a new, really dangerous middle tier. The tax deadline is usually September 30th. If you file on October 1st, the FBR doesn't just forgive you. You are officially branded a late filer. As a late filer, your property transaction taxes are higher than an active filer's. To climb back out of this penalty box and restore your active status, you have to log into the portal and pay a 25,000 rupees surcharge. So yeah, punctuality literally pays. There are also some massive hidden risks you need to know about. Take Section 111, where the FBR demands proof of income for property purchases, and Section 7E, which taxes you simply for owning idle property. If you're a non-filer and buy property worth more than 5 million rupees, Section 111 gives the government the right to ask exactly where that money came from. Can't prove it? You face a 100% penalty on the unexplained amount. No way around it. And Section 7E. If you own idle, non-agricultural land worth over 25 million rupees, the government assumes you are earning deemed income on it, forcing you to pay an annual tax equal to roughly 1% of its value, year after year.
Which brings us to our final part, Section 4, becoming an active filer.
I know those numbers were a bit scary, but becoming an active filer is an incredibly straightforward digital process.
You don't even need to visit a government office. You just go to iris.fbr.gov.pk. If you're salaried, your CNIC serves as your national tax number. You register, fill out your profile with your income and bank details, declare your assets in the wealth statement, and hit submit. Once it's processed, you can literally just text your CNIC to 9966 and instantly verify that you are officially on the active taxpayer list. Forget the stereotype of mountains of confusing government paperwork. The FBR portal is completely demystified. It's just a standard, clean, digital interface. It calculates your tax liability automatically based on what you input. If you owe tax, it generates a payment slip. If you don't, you simply submit. It's specifically designed to be accessible for everyone. And here is the absolute best part. By getting into this system, you unlock the ability to adjust all these advanced taxes against your annual return, keeping your hard-earned cash exactly where it belongs. Many of the taxes you pay throughout the year, like on your internet bill, your cell phone, or even certain property transactions, they're actually adjustable. As a non-filer, that money is just gone forever. But as an active filer logging into this dashboard, you can offset these deductions against your actual tax bill, which can often result in a refund. Now, you might be thinking, but I don't even earn enough to pay tax. Well, listen to this. Even if your income is completely tax-free, filing a zero return gets you on the active taxpayer list and instantly drops your transaction costs. The taxable threshold for salaried individuals is 600,000 rupees a year. If you make less than that, you owe zero income tax. But you absolutely should still file what's called a nil return. It costs you nothing, takes a few minutes, and immediately shields you from those brutal non-filer penalties, saving you massive amounts on routine bank withdrawals and even the heavy fees applied when registering a vehicle. Are you an overseas Pakistani? We've got an incredible financial hack for you. Using a Roshan digital account grants you active filer rates without even needing to file a local return. If you live abroad and qualify as a non-resident, purchasing property in Pakistan through an official Roshan digital account legally allows you to pay advanced taxes at the much lower active filer rates. The investment through the RDA is treated as a full and final tax payment for that transaction. It is a brilliant, entirely legal pathway designed to encourage diaspora investment without the headache of local paperwork. There's a saying that perfectly sums this up. Every year you stand non-filer, you quietly overpay tax on almost everything you buy and earn. This is exactly why you cannot afford to wait. Inaction is literally draining your bank account every single day. We've seen how the tax regime in places like the Malakand Asian is transitioning, pulling more regions into the documented economy. The consensus is crystal clear. Ignoring the tax system doesn't hide you. It just targets you with double and triple penalty rates. Registration isn't about surrendering to the system. It's about claiming your legal shield and protecting your own wealth. So, I'll leave you with this thought. Are you ready to take control? Use this explainer as your guide and stop paying the non-filer penalty today. The September 30th deadline for the 2026 tax year is immovable. Missing it drops you straight into the late filer trap with a 25,000 rupee penalty just to get back in good standing. You've seen the data, you've seen the massive financial gap between filers and non-filers on things like property and cash withdrawals, and you've seen how remarkably simple the IRIS portal actually is. The choice is yours, but remember, in 2026, staying off the grid is definitely the most expensive decision you can make.